Welcome to the Into the Wilderness podcast. I'm your host, Timothy Regal. I have with me today Nate Dean. Nate is a pastor and co-founder of Unlimited Life Concepts. He's the author of Holy Shift, a course designed to change how people think about money, investing, and banking. He's developed a system of privatized banking to help people take back control of their money using the infinite banking concept. Nate, glad to have you with me here today.
Man, I appreciate you for having me. It's been a long time coming.
Yeah, great. Now, your mission and kind of what you do through your program is to help people improve their financial IQ and to change the way they think about banking, financing, interest, all of that. What do people not know about money that most people should know about money?
I think one of the basics is centered around the principle of leverage. And leverage is something that we teach every one of our clients how to apply it properly. And not only apply it properly, but apply it in a safe environment that, doesn't put them in a situation where they're putting themselves at risk, because 99% of people, when they hear the word leverage, they automatically associate it with risk. But what I have found is there's ways to apply leverage in our lives that basically eliminates the risk altogether. And I think that's one of the biggest things that people need to understand. No matter what your income level is, the principle of leverage can be applied in your life at some level. And that is one of the things that wealthy people have been using for many, many years, is the principle of leverage.
Mm-hmm. The rich get richer.
Yeah, absolutely. Yeah. Well, wealthy people understand that, one, they understand the power of uninterrupted growth. And whenever you're taking assets that you own and you're not having to sell off those assets, but you're able to collateralize those assets, that means you get to hold the asset while you're still injecting value into your life in another area with the money that's coming off of that.
So how do people, I mean, because some people's education is so poor, they don't, what is leverage? And then how do you, give an example of how you would apply that?
So here's a simple example that, and I think it's tangible. And the reason that I give this example is because it is something that people can kind of wrap their minds around. And I'll say, to preface this before I get into it, is don't get hung up on the numbers. Don't get hung up on the example, because I'm just showing you what leverage looks like. Okay. So the example that I use often is, imagine that you saved up $30,000 for a brand new vehicle. And you call me up, you're like, Nate, I got my 30 grand, I got my car picked out, and I'm fixing to run down to the dealership and pick it up. I've been working hard, saving up all this money, doing it the right way, doing it the Dave Ramsey way, paying cash for a vehicle, as so many people speak to. And so I'm like, Timothy, man, I'm glad you did that, but I don't want you to go straight to the dealership just yet. This is what I want you to do instead. Run down to your local bank and drop that money into a CD, certificate of deposit. And let's just say, for this example, the CD is going to earn 4% interest. Again, don't get hung up on the numbers. And then what I would tell you to do is turn right back around at that same bank and borrow $30,000 from the bank using your CD as collateral. That's called a collateralized loan, which we just kind of spoke about a moment ago. Mm-hmm. And typically the bank is going to charge you maybe 1.5% to 2% over and above what they're paying you on the CD. So let's say they're going to charge you 6% interest on the loan. You're going to be earning 4% on the CD. You're going to be charged 6% on the loan. Now, just at a very basic view, this really sounds screwed up, what I'm talking about, but stay with me. So let's amortize that out over 4 years. Most people own a vehicle for 3 or 4 years. Let's say for 4 years, you're going to be making payments back on that loan, that $30,000 loan. And So 48 months at 6% interest is going to be about 704.55 a month. So for the next 4 years, you're making 704.55 back to the bank. After 4 years of making those payments to the bank, you would have paid the bank a total of $33,818, which means you paid $3,818 in interest.
Right.
But your CD after that 4 year period is now worth $35,096. So your CD is worth more than what you paid during that time. So what that gave you the ability to do was maintain momentum on that 30,000 the entire time. Because anytime you interrupt growth, you're losing time and momentum that it took to create that to begin with. Now, what you have to understand, using that example, what you have to understand is you finance everything in your life, whether you're paying cash for it or not. And I say that twofold. One is you're always giving up interest. You're either paying interest to the bank or you're giving up interest that money could have been earning you because you went and spent it on something. Now, the other reason I say that is because you're always making payments to someone. Money has to flow. So you're either making payments to the bank, or in that example, you are making payments to yourself for a future purchase. When you're saving up money, you're having to make a payment to some place for that money to be held. And if you know that you're saving up money for a vehicle, are you going to go throw that into a growth stock mutual fund? Probably not, because you want to make sure that money's going to be there when you need it.
Right.
You're not going to throw it into something that's extremely risky. So the whole time you were stocking that money away into a low interest savings, your money was basically not doing anything for you. It wasn't earning. And technically, if you factor in inflation, it was going backwards. So you were losing purchasing power the entire time. And on top of that, whenever you took that money and went and paid cash for the vehicle, or if you would have gone and paid cash for the vehicle, now you have lost all the momentum on that 30,000 completely. And now you got to start building it up again. So my pin tweet video on Twitter, which is something that I get comments on all the time, is comparing what happens when you're financing versus when you're paying cash. And ultimately, both parties are always working back to the point of zero. And that's something that most people don't understand, is if you can take that idea of you finance everything in your life and apply that and understand how to apply the principle of leverage, then you're going to end up recovering that opportunity cost, which is that money that's just leaking out of your life that you don't even know about. And when you do that, it's amazing how fast your money will grow.
Yeah, and that makes total sense when you explain it that way. And you mentioned your pinned tweet, which I've watched, and kind of that's how I was introduced to you, a couple of years ago. And in that, I'll put all your Twitter and everything in the show notes here, but you actually spelled it out on a whiteboard. What you just did is and some people who learn a little visually might better be able to understand what you just explained there. But that makes total sense to me. So why don't more people do that? Is it just they don't know about it, or they're so sucked into this is how you do it? You go to the car dealership and they give you the car loan there. You go to your bank and they give you the car loan there. Why don't people understand this?
Well, one thing I'll say is this isn't something that I developed or created myself. It was something that I was fortunate to be taught by a mentor. And, I went to school for business and finance. I was actually on a choir scholarship in college. But they didn't teach me anything about leverage, like that. The stuff that I teach my clients now has nothing to do with what I learned in school.
Right.
School was a good experience just socially. I learned a few things along the way, but pretty much everything that I teach now was stuff that I was just fortunate enough to pick up and learn from other individuals. I got to pay tribute to Nelson Nash, the creator of the infinite banking concept. If it wasn't for him, I wouldn't be here right now doing what I'm doing. And the only reason why I'm doing what I'm doing is because I was fortunate to learn about Becoming Your Own Banker, the book that Nelson wrote.
Yeah, I have that here
and
somewhere.
yeah, so you're looking for it.
Yeah.
So I was fortunate to. I got one laying around here somewhere too. Oh well, I got more than one. But anyways, I was fortunate to come across this book, Becoming Your Own Banker, and read the book. And I had a strong Dave Ramsey background, along with my friend Brandon Goswick, who's my business partner. We both had strong Dave Ramsey background. So when I read Becoming Your Own Banker, I knew Dave Ramsey is not going to be too thrilled about this book.
Yeah. I've read, some of Dave Ramsey's books and stuff like that. And honestly, especially in Christian circles and in the churches, my church even did one at the Sunday school class on his program. I mean, he's on par with the Apostle Paul in some church circles, So what about his theories and his concepts is incorrect? And what's the difference between what he teaches and what you're teaching?
Well, you have to understand Dave's story and where he came from. So Dave had gotten into real estate at an early age, in his early to mid 20s. And he was leveraging properties left and right. And all of a sudden, the way he tells the story is the banks figured out that they had loaned out a crazy amount of money to a dude that was considered to be inexperienced, so to speak. If I remember correctly, he said, once the banks found out that that I had all this, outstanding money or whatever, it also had something to do with the economy, that the regulations changed or whatever. But they started calling his notes, which meant if he didn't come up with the money, they were going to basically take back the properties. And so Dave was over leveraged. And that's not something that we would ever recommend to a client, is to be over leveraged. But Dave was over leveraged, and it destroyed his life for a while. But at the same time, it also gave him a story, and he has profited greatly from that experience. But you have to understand where he came from. He was in a situation where leverage had burned him because he was not a good steward of leverage. And if you understand how to be a good steward of leverage, then like I said, you're not going to put yourself in a situation where you're at risk, where you're going to lose everything, where you're going to go bankrupt, all this other stuff. So understanding his story and where he comes from, he basically points people in the opposite direction of all the things that he did. And so once he started doing everything basically in the safest, most conservative way he knew how, he started teaching other people how to do the same thing. And you go through his system, there's nothing magical about it. And I think the power of his system is the community that's a part of that. Because when you go through financial peace, it's not just like, oh, okay, I'm going to go through financial peace by myself at home. I'm never going to talk about it to anybody else. You're typically doing it in a group setting, all that stuff. So there's some accountability that comes along with that. And most people are over leveraged in the amount of debt that they carry. So what he has done for people in helping them understand bad debt and discipline, and what it takes to remove those things from their life, man, I applaud him for that. I mean, he's helped a lot of people, and he helped me early on in my financial life. Where we start to differ is really in how we grow, how we make that better. One of the things that I don't understand is if you listen to him, he's always talking about eliminating risk, eliminate risk, eliminate risk, eliminate risk. But then he points people back to growth stock mutual funds, which are extremely risky.
Yeah.
And he also, and I don't want to get into why he does this, but he teaches people that they can get 12%, they can average 12% in a growth stock mutual fund. And he shows these crazy charts and graphs and everything about how people are going to retire multimillionaires because they were solely dependent on growth stock mutual funds their entire life. And you go back through the history of the market, and there's not a fund that has averaged 12%.
Right. His whole concept is basically that you carry no debt, and
right.
You cut up your credit cards, you save up for everything, you don't go out to dinner. And I think that resonates, especially in a lot of Christian circles, especially the more conservative denominations.
Yeah.
I live in a very large, not older Mennonite, but more modern Mennonite community here. And so that really resonates here with a lot of the Mennonite community, and especially when you get out in the other parts of Pennsylvania where it's very Amish, there's certainly no debt. But yeah, the Mennonite community, some of the Baptist community, some of the more conservative Christian denominations, I think really push that no debt concept. And I think that's why a lot of his stuff has taken hold. But at the same point, it's almost impossible in today's world, or very hard, not to have some type of debt. And so what you teach with the unlimited life concepts and with the infinite banking concept is not, yes, you don't want to have any debt. That's obvious. Everybody knows that. But you don't do that. You don't get to that point by just cutting up all your credit cards and taking no risk whatsoever. You teach how to leverage that so that it works for you, not against you.
Right. Well, the reason that the word loan gets a bad rap is because 99% of people have never paid a loan to a system that they own and control. They're always making payments to someone else's system. So when you have a system with infinite banking, and I'll just touch on this briefly, and we can get into it a little bit more if we need to, but essentially infinite banking, Nelson Nash, the creator of the concept, figured out that there was a way to properly structure a dividend paying whole life insurance policy to create your own private banking system. And in very simple terms, the way I think about it and the way I explain it is, imagine having an ever increasing line of credit that you own and control, that you're earning interest off of, where you can use that money to create value in your life somewhere else. You can always pay that back to your system, so that you get to recycle those dollars and use them again. But there's a guaranteed contractual rate of growth where every time new value is created, the floor gets a little higher and a little higher and a little higher. And so you have an ever rising floor. So if your floor keeps going up, guess what happens to the ceiling? Well, it keeps going up too.
Right.
It's a powerful concept. It's something that obviously people who follow Dave Ramsey, they know that Dave talks about how terrible whole life insurance is.
Right.
But here's something that's kind of funny. I'm trying to remember exactly when it was. I think it was in the 70s. The insurance companies had created a product called single premium whole life. And people could roll their retirement out into it tax-free, live off the interest tax-free, and then pass on the death benefit tax-free. Like it was a triple threat, basically, to the IRS and Wall Street and everybody else. And so finally, through a lot of lobbying, Congress finally stepped in 1988, and they redid the tax law. It's the first major change that's ever occurred with the tax law when it came to whole life insurance. But it was because the insurance company had created a product that had that kind of fell outside of the tax code at that point.
Yeah.
So
you can't threaten the IRS or Wall Street.
Oh, no. So what happened was in 1988, whenever they implemented that rule, they were trying to prevent people from putting their money. The government's trying to prevent you from doing something. It's probably a tell that there's some value there somewhere.
Right. Sure.
So they created this rule to sort of prevent people from putting a lot into that. And but if wealthy people had to have a law written to keep them from doing something, don't you think, forget about infinite banking for just a second, don't you think that there's some sort of value in whole life insurance?
Right.
Now, I meet people all the time. Ever since we started our business, I meet people all the time who've been very successful in a lot of different areas. And what almost all of them have in common is they already have whole life insurance. They were just never taught how to be their own banker and how to actually use the system to their advantage, leverage it properly and all that stuff, which is what we teach. So if, as Dave Ramsey says, if whole life insurance really is the worst place in the world to put your money, why are successful people continuing to do it?
Right. And I think people, when they think of life insurance, whether they're thinking of whole life insurance or term life insurance, they're thinking solely of the death benefit.
Yeah.
And I'm a funeral director, so I see that all the time. People have life insurance and they use that, they get a $10,000 policy or whatever to pay for their funeral, which is smart. And whether it's whole life or term, I think it's smart because I meet with a whole lot of families who somebody dies unexpectedly and they have nothing. And they've done nothing to prepare for that. And it's not just funeral costs, it's all the other things that are involved with it, but that's a different conversation. So, yeah, I do want to get into this infinite banking concept a little bit and explain how that works with the dividend paying whole life insurance, because most people just think of life insurance as, hey, I'm paying into this whatever a month, and when I kick the bucket, my family is going to get this lump sum death benefit that's going to pay everything. And so explain how you can use the infinite banking concept with a whole life policy and use that to be your own banker. How does that process work?
Well, one thing I'll say with term life insurance, just kind of understand the difference. With term life insurance, the only way that it works out to your advantage is if you die.
Right.
And at that point, it's not really to your advantage. It's for the people that you love and care about. Now, we're not completely against term life insurance. There's still a place for that. But with dividend paying whole life, with infinite banking, we're more focused on creating a cash flow strategy. It shows you how to run your money through a system that you own and control. It still gives you the ability to go out and do all the other things you want to do anyways. Infinite banking and whole life insurance, the way we teach it, it's not an investment strategy. It's a cash flow strategy. We're going to show you how to implement this into your life and still go, we have clients who are real estate investors. We have clients who are crypto investors. We have clients who are stock investors. They're still going out and doing all those other things they want to do, but they're just running it through the lens of infinite banking now, which means they are creating minimum guarantees for their money no matter what, which is powerful. So when you're leveraging your money, I use real estate as an example often because I think this is really cool. And I did this when I bought my land last year. So there was 23 acres that came up for sale. We weren't looking for 23 acres, but it came available and we really liked the property. So we decided to buy it. So I was able to take my cash value inside my policy. I had to put 20% down on the land. I didn't have enough in the policy to buy the whole piece of property, but I was able to take my down payment from my policy, which is equity inside of an asset, which we'll talk more about later. And then I took that 20% and I put it into my land. So I took equity from one asset and created equity in another asset with the same dollars, which is crazy. So I've got equity now simultaneously in two different places.
Right. Without having debt from a bank.
Right.
And without
the
risk of that.
Yeah. I mean, we still are making payments on the land or whatever, but we're using our system to shift all of that inside of our policies over time, which is what we teach people how to do, is shift outside debt to what we call inside debt. So we can bring that. We're basically showing people how to refinance debt away from the bank using their system. So if you have your banking system and somebody else has a banking system and you're paying money to that banking system, we want to get that money going this direction as quickly as possible. So what you're effectively doing is you're just refinancing that debt away from the bank, where the bank controls the terms, where the bank's benefiting from the interest, and you're bringing that into your own system where you control the terms and you benefit from the interest. So that's just one example of how powerful that can be, because I mentioned earlier that I had equity in my policy. So your whole life insurance policy, your death benefit, is part of your asset column. That is part of your future net worth. And just like anything else that we are building and creating for ourselves, one day it's got to go to somebody else. We can't take it with us. We know that. So the cash value that you're building up inside the policy is the equity that you own and control. And really, when you boil it down, essentially what the insurance company is allowing you to do is leverage portions of your death benefit to create a living benefit now.
So you're buying against or you're not buying, but you're borrowing against your death benefit in the insurance policy. So you take money from that and then you pay it back to yourself. Or if you happen to drop over, then the death benefit is reduced by that amount. Is that correct?
Yeah. So like if I had a $500,000 policy, which I have a few of those, but if I had a $500,000 policy and I had a $50,000 loan that I had used for something else out there, and something happens to me, well, the insurance company is just going to subtract that 50 from the 500, and my wife's going to get 450,000.
Right. So there's some risk there of losing that. You don't want to do all of that because something could happen, but you're borrowing that. The point is that you're borrowing from yourself and paying yourself back instead of borrowing from someone else and paying them back, and they keep the interest.
Well, and you also have to understand the problem that infinite banking solves for is that wind current that we face that we don't realize we're facing. So obviously we don't want to finance bad consumer debt or anything like that. But if there's debt that is creating value for us, so like if I wanted to, I could pay off all of my land, but I would have to liquidate a lot of other assets to do that.
Right.
So instead of doing that, I make a small payment to the bank where those assets are growing at a much faster rate than the amount of interest that I'm paying to the bank. So having the ability to pay off debt in most cases is more powerful than just paying the debt off. If we're talking about good debt. Now, bad consumer debt, we want to eliminate that as quick as we can. We want to, if it's not creating value for us, why are we doing it?
Yeah. So you're talking more, having good debt that you can leverage is debt like a mortgage on a property, vehicle, different investment in a small business, something like that, where you're going to have potential returns from that versus going out to eat and buying toys and stuff like that.
Yeah. So here's a cool example, and I think a lot of people can relate to this because of the people that follow us on Twitter. We're a lot of us are dabbling in crypto, some more than others. So this was pretty cool. So back in August, I decided to stake 10,000 worth of Bitcoin with one of the exchanges called Celsius. And so with that particular loan, they're going to charge me 8.95% interest, but they're going to get there. It's a 50% loan to value. So they're going to give me $5,000 cash. So Bitcoin wasn't really doing anything for me to create value. So I decided, hey, why don't I get a little bit of liquidity out of it? But by staking it, I don't have to sell it off. I still get to hold my Bitcoin because I don't have any intention on selling it anytime soon.
Mm-hmm.
So I got a $5,000 loan that I went and put to work in another cash flow producing asset. Well, because of the appreciation and the price and everything of Bitcoin in the last several months, in October, when I looked at that $10,000 worth of Bitcoin that I staked was now worth nearly $20,000.
Wow.
So I got a free loan.
Yeah.
Because of the appreciation of the asset. Now I could have sold off $10,000 worth of Bitcoin and just taken the 10 grand, but then guess what I lost? I lost the opportunity cost on appreciation in that regard.
Right.
So then whenever I took $5 grand and I paid that loan off that I had, well, now I've got access to basically double what I had to start with.
Yeah.
So the 8.95% interest sounded kind of high, but in the grand scheme of things, it wasn't nothing.
Mm-hmm.
Like the appreciation completely took care of that. Now, that is I don't want people to misunderstand that there is risk involved in doing that. I'm not saying that that's a risk-free thing, but it's another example of leverage and holding assets instead of selling off assets.
Right. So let's say someone is hearing all this. You've explained the infinite banking concept and how that works. Besides calling you and Brandon and getting started with you guys, how do they get started? Like, let's say, hey, I'm looking to, pay down some debt. I need to buy a car in the next year or two. I got $500-600 a month that I can afford to put towards this. How do I start with that?
So after someone goes through our process, which our course is just the gateway to our educational process, get you connected with us. We start working with you one-on-one to develop a customized strategy. So we go through a discovery process of learning more about your cash flow resources, things like that. And then we design a custom strategy based off of your resources, based off of your goals and your dreams and everything like that. So we're able to show you what it looks like if you decided to implement this in your life. You get to see with your numbers, with your life, what this looks like, how it plugs into your situation. So we teach people as much as they want to know about the concept. And, once we show them their strategy, if they see the value in that and they want to move forward and get started and work with us, then we come alongside them as their coaches, as well as their agents, and write the policy and get it set up for them. And then, you got us as support for life.
Right. Great.
We do ongoing reviews for clients all the time because life changes. People have windfalls that come their way. They want to know what to do with. So we get calls all the time and we're like, hey, I just got this money and just want to make sure I'm doing the right thing with it. And it's really humbling because, some of our clients are just extremely successful, have had a lot of success in their life. But at the same time, what I've learned is successful people always understand that there's something else to learn.
Yeah. And you mentioned how this is you mentioned earlier, it's more of a cash flow strategy than an investment strategy. But is it also an investment strategy? I mean, is this preferable to putting money, even if you're not planning for something specific, like a house or a car or whatever, to be setting money aside through this versus a stock or a CD or an IRA or 401k or whatever you might be doing towards retirement?
Well, you have to look at the circle of control. And what I mean by that is, imagine yourself in the middle of a circle and you've got these rings that are outside that just keep getting, further and further apart from you.
Sure.
And the further away that your money has to go from you, in order to grow, the less control you have over that, the more risk that you take on with that. And so with infinite banking, we just show you how to maximize the efficiency of everything that you're already doing in terms of cash flow and what that looks like. If you want to go out and invest in other things outside of that, it's completely up to you because it's your system. You own it, you control it, you decide what you want to do. We're just going to be here as resources and as coaches to, assist you in any way that we can, but we're not investment advisors. We're not going to make specific recommendations on investments or anything like that. But at the end of the day, if all you ever did was just put money into it, infinite banking is just a savings account on steroids. Where it becomes powerful is where you actually start leveraging those dollars. So you're able to create multiple uses for your dollars.
Okay. So like you could, the idea is to leverage it, but it is an investment. It's there if you need it. So it's more, when you mean by the area of control, you have quick access to it versus like an IRA, right, which you can't touch till you're 70 and a half or whatever it is.
Yeah. Okay. Well, and with the IRA, I use this example, if you got $10,000 that you put into a Roth IRA, and I don't even think you can, I think the limit's like 6,000 or 7,000 or something like that.
Yeah.
But, let's just use 10,000. So let's say you put 10,000 into a Roth IRA, but you also put 10,000 into an infinite banking plan. And, God forbid something happens to you. Well, in that example, your wife's going to get 10,000 from the Roth IRA.
Mm-hmm.
But if it was in infinite banking, your wife would get several $100,000. So in a sense, you're buying insurance on your capital.
Yeah, that makes sense because you'd get, you with the IRA or a Roth IRA, you're doing that after taxes, so you're getting it tax free. But right, it's just what you've paid in plus the interest. With the life insurance policy, if you were to pass away before your time, you not only get that, you get the full death benefit of the life insurance policy as well.
Right. And so, with the Roth IRA, people, when they're putting money into a Roth, and I use that as the closest example to infinite banking, but infinite banking can't really be compared to anything because there's nothing else out there that's like it. But
right,
comparing it just to a Roth, when people are putting money into a Roth, they're not thinking, I'm going to use some of this money next week, next month, next year, 5 years. People are thinking 30, 40 years down the road.
Sure.
So if you're already willing to put money into a Roth IRA, well, then you are thinking long term. And if you're willing to think long term, then infinite banking can work wonders for you.
I'm just trying to put myself in a position of somebody listening to this who's never heard of this before. They're like, this sounds great. Right. There's all the benefits, of having control over your own money. You pay the interest to yourself. You have the death benefit if something happens. What's the catch?
Probably going back to thinking long term.
Yeah.
Because you're not going to, as you're funding your system, you're not going to have access to all of your money day one. Because if you did that, every drug dealer and money launderer would be lining up to do the exact same thing you're doing.
Sure.
And we actually go through to maintain our license. This, we have to go through anti-money laundering training.
Yeah.
So there is a tiered waiting period before you can get access to all your premium dollars that you're putting in. And I mean, we're very transparent, so I'll just put it out there. So in the first year, you're going to be able to leverage about 55% of your premiums that you put in year one.
Okay.
Year two, it's going to be around 70 to 75%. Year three, it's going to be around 90 to 95%. But then by that fourth year, that's typically the sweet spot that we kind of call the mark of efficiency, where by that fourth year, if we're talking about $10,000, I put $10,000 in that same year, I'm going to be able to leverage that full 10,000.
Okay. So it's certainly not a get rich quick thing where this is the long haul.
Absolutely.
Yeah.
And the only reason why I started teaching this, I started doing this, is because I implemented the concept in my life and saw the value of it long term, but also the short term benefit, because I did have the ability to start shifting payments that were going out to someone else, leveraging my system to shift those back to myself. And I saw that short term benefit and saw what it was creating, but then also long term what I was going to be building for my family. And man, I couldn't shut up about it. Like I just, me and Brandon both, we just knew that like this was something that we wanted to teach other people how to do too.
Great. How do taxes play into this? So are there tax benefits to this? Are you going to end up paying taxes on it? What role does that have in the infinite banking concept?
Well, just like a Roth IRA, it's a post-tax strategy. So the money you're putting in is money that you're already paying tax on. So on a tax-deferred plan, this is something that I talk about a little bit on Twitter. Most people don't think about it this way, but when you are deferring taxes on a qualified plan, as an example, what you are effectively doing is you are creating an unknown debt to the government to be determined by them at a later date.
Okay.
Most people don't think about that.
Right.
They think, oh, look, I get this, tax advantage right here in the moment. But I would venture to say that the tax advantages that you're getting up front, because most people would agree that taxes are going to be higher in the future, not lower.
Sure. Right.
So the tax advantages that you're getting now are going to be possibly eliminated in the future because of the increase in the tax code. So I like the idea of getting all the known variables out of the way up front with a post-tax strategy. And so whole life is post-tax. So as you're putting money into it, I don't even have to report that money. Like my CPA, I think this is kind of funny. My CPA doesn't even know how many life insurance policies I own. I don't have to report any of that.
Right. Right.
So I can put that money in. I can leverage it however I see fit. I get the tax-free growth. And then one day, whenever I graduate and jump off this earth, then my family is going to receive the benefit of that, and it's going to pass on tax-free.
Do you pay tax on the dividends of that?
No, because what we're now, you can pay taxes on the dividends if you don't understand what you're doing, but that's one of the things that we teach people how to do, is how to always be using leverage with their policies, because when you're using leverage, that's a private loan with a private company. There's no tax implications in that regard.
That's good, because I think a lot of people think, well, this all sounds good. What are the taxes? Am I going to get nailed when I do that? So knowing that, and I guess that's just the fact that a lot of people don't have a very good financial education or financial IQ. Kind of going back to what we talked about when we first started this conversation. It seems to me that financial education you talked about when you were in school, it seems to me that they teach finances on what's best for the banks and what's best for the federal government, not necessarily what's best for you and me.
Yeah, I would say our education, for the most part, is set up in a way that teaches us how to survive, not thrive.
Yeah, that's a good way to put it. And they want you to have your, the American dream of your house and your 2.4 kids and your white picket fence and all of that. And they say, oh, you're going to have this, but they don't necessarily explain to you, you're going to have all this debt and all this other stuff and everything like that. And I think you see so many people now that are kind of house poor, where you look at them and be like, oh, they're making $150,000 a year, $200,000 a year. They got this gorgeous home, driving a really nice car. They got, they go on their beach vacation every summer down to the shore, all of that. but they actually have less money and less freedom than somebody who might be making $60,000 a year and has everything under control and is setting this money aside and using that leverage for them. And they have more financial freedom than somebody who looks on the outside like they're loaded.
Yeah.
You know.
Yeah. It's funny. I think I tweeted this out one day, is the people that you envy are typically the ones that are more broke than you are.
Right.
Right.
So what do we have to do to reverse that? I mean, besides obviously getting people to understand your concept with unlimited life and infinite banking and all that, but what do we have to do to change the conventional wisdom about finances and money?
Well, I think the education around the banking system and really what the function of banking should be versus what it is really important. The function of banking, from what we see, is a system that is manipulated and controlled by people that we will never see. There's a game that is being played that we're all a part of, and there are certain rules that the players use to their advantage. And with infinite banking, those are just some of those rules with understanding leverage that you can use in your life that can actually help you and make you stronger. We talk about the concept of making your money more efficient. And I use this example a lot. What you're doing is you're basically just creating muscles for your money that give you the ability to do more, because everybody else's money is going backwards. But if you have a system that you've implemented that gives you the ability to move forward, you're going to start to separate yourself more and more from everybody else. And infinite banking is not like anything else that's out there, as I said earlier. So when you're doing infinite banking, man, you are you're swimming upstream. You're swimming against the current. Like everybody else is going that way, and you're heading in a different direction.
Yeah. The financial system that most people know and understand is the house is always going to win. The casino is always going to make the money, even if you win a few games of poker. The house is always going to win. The bank's always going to make out. The government's always going to make out. The idea is, okay, if you understand the house is always going to win, why not have you be the house?
Yeah, absolutely. Yeah. If you are there's players, there's roles that are being played in these different positions. And the more roles that you can take on and assume on yourself, the less control others are going to have on you.
Right.
So if you become, if going back to the bank, if you are the depositor, but you're also the shareholder, but you're also the owner, well, that's a pretty powerful system right there.
Yeah.
In most banks, we deposit money into a bank. Somebody else is the shareholder, so somebody else is getting the profits off of that. Obviously, the owners are reaping the benefits as well, because they control it. So the shareholders are profiting off of it. The owners are controlling it. And so infinite banking is all about certainty and control. Certainty is knowing that your money is always going to be there. It's always going to be growing. The control aspect is just the fact that by contract, you're the only one that you have first rights to those dollars. Nobody else gets to touch that money. A lot of people don't realize that whole life insurance is actually, what's the word I'm thinking of? Lawyer proof, whatever you want to call it. You can't be sued.
Right.
There's a word for that. I don't know why it's just escaping me right now.
Right.
But
if you get sued, they can't take your life insurance policy.
Yeah. So it's protected asset class. That's what I was thinking. Yeah, it's protected asset class. So you don't have to worry about being sued for it. You could actually a whole life policy could actually make it through bankruptcy, which is something people don't realize. So there's a lot of other little cool advantages with, running your money through whole life.
Well, this has been an awesome conversation, Nate. I mean, I've worked with you before, and I learned some more stuff about it today that I didn't even know and understand. I want to give you the floor. Where can people go to learn more about this? Where can they go to sign up with you and Brandon, and how can they get started?
I used to say my biggest presence on social media was Twitter, but now it's Instagram. Me and Brandon launched our Instagram page at the beginning of this year, and it's growing and doing well. So Instagram is ULC Money. You can check us out on Instagram there. Also, my Twitter handle is Chronicles Nate. You can check me out there. The link to the course or anything like that is going to be in the bio of either one of those accounts. You can also go to ulcmoney.com and check out our page there and get signed up for the course, get started. It's, like I said, it's one of those things where it's a gateway to our educational process. And we don't ever want to feel like anyone is being tricked into learning something or anything like that. So if you go through our process from start to finish and you don't see the value in that, we refund you 100% with no questions asked. If for whatever reason, at the end of the day, you don't see like Infinite Banking is going to create the value that you're looking for in your life, then happy to refund you. We just want to get the information in front of you so you can make the most informed decision for yourself.
Awesome. And I'll put all the links and everything in the show notes as well. So if you're listening to this and think this is great and want to learn more, you can follow up with Nate and get started. Again, Nate, really appreciate you joining me today. This has been awesome. I've learned a ton. I'm sure my listeners have learned a ton too. And I love what you're doing. You've helped me personally and continue to keep spreading the word and changing lives, both and under finances and for the Lord as well.
I appreciate you, brother. Thanks for having me.
Absolutely. This has been an episode of the Into the Wilderness podcast. This is Timothy Regal. Thank you for listening. For additional content and to learn more about Into the Wilderness, visit www.intothewildernessblog.com. You can follow me on Twitter, Instagram, and all other social media at Timothy Regal. TimothyReigle. If you're like me and many other men, you've struggled with porn. I was addicted for over 15 years and thought I would never break free. But through accountability, hard work, and never giving up, I found freedom from porn and sex addiction. If you're fighting the same battle, know there is hope. You can defeat this, but you cannot do it alone. That's why I offer one-on-one coaching to walk beside you in your battle. I'll provide personal guidance, support, and encouragement, and most importantly, accountability to keep you on track and help you reach your goals. So if you're ready to finally quit porn for good, if you're ready to put in the hard work, and if you're ready to finally take control of your life back, click on the link in the show notes to go to www.intothewildernessblog.com or DM me on Twitter or other social media to get started in your path to freedom today.